morning, good evening, good afternoon. I have no idea what time you're watching this, so welcome. It is the very small review as to where we've come from. This is our forecast going in for the week of September 1. I want to remind you it is September 1 on Friday. The first Friday of every month is going to be your jobs report, and that's what we have on Friday coming up. It is also a 3-day weekend with the Labor Day weekend taking place. So it's not so much traditionally as much as it is pretty coincidentally, for some reason, we do tend to perform decently well on a Jobs Friday, and we do tend to perform decently well heading into a 3-day weekend. So, with that in mind, I want to make caution to everybody that there is absolutely nothing I see that is bullish. At the same time, there's nothing I see that is bearish. We did a lot of work during the month of August, an incredible amount of work, and we've hit very key levels on all of that work. Thus, for this week alone, I like to take the approach of wait and see while taking advantage of the data that we have in front of us to be able to trade. So, quickly here, unfortunately, you're staring at this one screen. This is a spreadsheet for the month of August. We started at 45.78.83. We're down to 44.05.71. This was our second 4,400 close here on Friday. Like I was sharing there in the message room or just in the regular options chat, because I didn't want to lead anybody into something on a Friday, because Fridays you should relax. Watch out for that 44.20 level. And 44.18.46 was the highs that we hit right at the end of the day. So very advantageous. We got our green week. The SPX Credit Spread of the week was a double whammy. We were already expecting it earlier in the week, and there was a $1.80, $1.50, $2 credit that was able to get taken early in the week. Elongate got in there on Friday when we got our dip on the morning, when we dropped down there to 43.56, which I'll go over, and he got $3. So he had a maximum potential of about 150% return on that trade. And obviously with the close, 44.05, we did not break 44.18.46. We did not break that plus 1%, which was that threshold I was talking about. And we did not break down minus 1% or the safe level below. So where are we? Well, let's go into that real quick. Blind mice, 3 blind mice, head and shoulder setup. Very, very, very common. And because we have been in a bull market for a little bit greater than, call it 13 years, these head and shoulder patterns are very easy to get the novice investor a little bit over bearish. You have my alert out there for the QQQs for September. That's pretty much what I'm sticking with for now, and I'll explain why in a little bit. Bring you over here into, again, just a quick review as to what we've got going on. I'm looking here from Friday last week into this week. And as you see here, your lows over here back from August 22 were broken when we went into that dip on Friday. And we came essentially down, although we did fractionally break those lows from back here on Monday last week. So highs of the week on the NVDA pump, lows of the week came here on Friday. I'll share some more insight with you on that and zoom out a little bit to look at how this move down has taken place. So we had our move down, and it's just pretty clear to a blind eye that this is a very nice ABC. I want you to see this move that we had down and this one that we had down here as well going into Jackson Hole on Friday off of the NVIDIA. They're pretty unique in that they mimic each other. So not taking that for any kind of biased opinion that, oh man, we're going down. You know. I'm looking here at this 4471, which I'm still looking at, which we mentioned last week. I'm looking at this 4471. 4471 being a place where we could get a major test area and a major bull bear trap. 50 retracement of the drop. And on the green highlights that we've got here, I'm looking here at this having been an ABC wave down, this being an A, perfectly ABC to the top, a very clean ABC to the bottom, this being an ABC looking for somewhere in this 4471, 4479 area. And then we'll get an opportunity to see what we're working with, what has been broken, what has not been broken. So again, I am not bullish looking for 4471, 4479, but I'm very patient looking for them to have the opportunity to go over and test those areas, considering we have zero earnings coming out anymore. It's finished. It's over. The names that are coming out mean absolutely nothing now that we've got NVIDIA out of the way. Economic data, ooh, garbage. Fed speakers, they're hawkish, but people are trying to tone it down into a different way. They are hawkish. There's no question about it. They are speaking in a very hawkish tone, and there's a couple of things that we're going to be watching for that. One of them being the US dollar, that 104.636. The other one being the 10-year for that 44.10, and the 2-year. The 2-year being over 5% is a very, very bad sign for upside on the stocks. So looking for these areas here, 44.71, 44.79. Bring you into a view. I'm probably going to have to go back and forth. But again, having come down to this being our OPEX week in gray, putting in that low on OPEX Friday, and then having made that NVIDIA move to the upside and back down, again, I am not a trend line guy. I'm not a trend line guy at all. This is your November highs and your February highs right above me, right where we pretty much topped out there on Wednesday. These are your March and May lows of this year. So we're kind of in this little bit of a wedge, and I'd rather not zoom out because you've got so much detail on this chart, and some people get a little bit confused over that. But I'll bring you back over here onto the default, and again, looking here as how we've got a very nice head and shoulder pattern. So it is something to be very cautious about, especially about being exuberantly bullish, looking for some upside movement. It is going to be a day-by-day situation from the way that I'm looking at this. Come back over onto the SPX regular so I can zoom out a little bit. And here's what we're working with, right? We had a perfect visit last week, Friday, to the 23.6 retracement to the October lows, the 2022 lows, when we hit that bottom. Same thing on SPY, same thing on QQQ. Thus, this bounce and then its failure because of having broken those lows. So this is what I'm looking at for now is 44.71, 44.79. Any break in this 20-point range down here below, Friday's lows, 43.56, and last week Friday's lows, 43.36, which is your minus 10% line from your all-time highs. Any break below those, I'm immediately focused on that bigger, wider view that we've been continuing to share, which would be something down here in the 42.30 range, possibly down into that 41.80, 41.60 area. And I'll show you why. It's, again, nothing to go out there and start betting your farms on. But here in red, right here, I for some of you, there's too much detail. But just work with me. I'll change this over into white. All right. All that I've got here is a channel, right? And from May of last year, 2022, we had traded inside of this channel for forever, literally forever. From May, we had that little break over here in August of last year, broke back down, played all inside of here, even up into May of this year, played inside of it, And then just over here into the end of May was where we got that breakout and had that little blow off top. I wouldn't be very surprised at all if we do get that confirmed move in September, which I am 100% expecting, that we will have a move down here somewhere around 4180, 4155 maximum. Something into the 4230 ranges would still be very bullish to be able to consider a move back to the upside. At the same time, it would very, very much have depleted the energy after a greater than 1 month long decline already to have made it to where, okay, that's it. We give up. I scream mercy. It's over, and that's the way that it goes. So 4480, 4470, my upside targets for this week, if there is any way that they can take advantage of that, which I'll go over in a second. 4450, 4430, 4355, 4335. These are the downsides, oh shits. And I'll show you how we are actually set up for that oh shit. 3 red weeks. Got a green week yesterday. So that's it. One of two things. Number one, the red streak is over. Count starts over. Number two, this would be a second green week. If we do close above our open on Monday, which is due to be something like 4405 for now, that would be 2 green weeks. Same goes. You don't tend to get 3 green weeks in a row. When you do, just like we had when we went into July, it tends to bring on a very bearish decline afterwards. So, having had 1 green week, we're obviously paying very close attention to whether or not we can get a second one at the end of this week, which is Jobs Friday, which again is going into a 3-day weekend. Something that you tend very typically to go into with a little bit of strength only because you want the consumer to go out there and spend money. It's a psychological thing, nothing more than that. Bring you back over onto the charts. And again, where I'm looking here on the ES, this channel that we've continued to be in very perfectly came right up to the top of it on NVIDIA. We've broken the bottom a couple of times now, having been very cleanly playing off the bottom and just above the middle on this channel on the downside throughout the month of August. Now it's getting a little bit volatile down here, and now it's starting to press a little bit harder onto this lower level. Well, we've got down here our 100-day moving average, which, I'll move it out here. We've got our 100-day moving average, which is untested, unvisited, which is just sitting down here below the lows from last week, Friday. Possible? Very much so. This gap is still the gap from June OPEX, which has never been filled, which goes down to around 43.05. So again, it would be a little bit greater than a 50-point lower than where we were already on Friday. Last week, that would take you down 43.35 minus 50. You're looking somewhere around that 42.85, which we've noted out for a few weeks already. So watching this very closely to see what's going on and whether or not anything in that 44.36 range over on the ES need to be cautious, because it's been very resistant over the last, call it 10 days, 15 days. Right here, this 44.36. So watching it pretty closely, but as of right now, it's for the bulls to go and fuck up. That's where it's sitting right now. Again, over here on the SPX, looking at it from a wide view, that's what it kind of all looks like, is that it should be looking for something in that 4470, 4480 range. Bring you on to a very detailed view, which is what we use, every day. You've got a gap up here, well up above that 4480. But again, it is going to be something that is going to need to be worked on really, really hard and really strong for this not to screw up and completely fail. So got a good setup right here for what we had, but we've got to be really cautious about getting over positioned during the course of this week with this week's expirations. So I want to make that clear. Not getting overcommitted and overexposed on positions that are expiring this week. So take it very light, take it with a grain of salt as you go in and trade during the course of this week. QQQ. Perfect move to the 200 extension on the bounce. Perfect move to both of the drawings for the 200 extension and that 100. Kissed it, rejected it, NVDA earnings. And what you've got since then, which I'll bring it on out, we broke under those lows at 362.70. We broke under the lows at 359. So this has that sell down after QQQ on Thursday, where I was a little bit over emotional in the video for Friday. Dude, that was one of the greatest days that you will experience in the course of a year. So that's where we're at. I want to zoom out here a little bit. And again, not getting over exuberant about this expectation. How it is set up is very, very likely to be looking for something down in this 341, 334 area during the course of September, which is why I took the position on those QQQ puts, which are already up 100% as of yesterday, Friday. So I bring you here onto the VIX, okay? And as we had gone into extreme detail for weeks now, once we got this move to the upside, that 1542 and 1502 were our support levels. 1622 is where the bears have the ability. Above 1811 is where the bears have their exhaustion. So this is where you are best set on buying the dips, is when you are seeing the VIX up here in the 18s. Now, in buying the dips, you've all noticed this week when you've tried to do that, that if you don't get a strong price move to the upside, your calls are not going to go anywhere because your price index, your influence of the VIX together with the pricing of the options, you're not going anywhere. So you need a very strong and very fast move. 1888, this was a week ago when we posted the lows. Then you had your NVIDIA pop. And as I was mentioning to everybody, the pop is a lot lower on the VIX. So this is a bullish setup for the indexes, for the QQQ, for the SPY. That is bullish having had a lower low. The only thing that we were able to do last week, which was pretty obvious as I shared, is on Friday, the VIX gets crushed. And here's your Friday. Well, come up here playing that 1622 early in the morning, break up above 17, and everybody got trapped, and the VIX got crushed right down to that 1542. So again, not getting over committed or overexposed during the course of this week. This week is very much a sit back, wait and see, and prove it to me kind of scenario. And we're going into, again, jobs on Friday and a 3-day weekend. So take a step back. You've just had one of the best profitability months of trading during the month of August. And September's not far away. Let jobs go. Let the weekend go by. Quad OPEX is coming middle of September. And from what I see, also what I've been talking about with a couple of people, there is a very strong possibility that we get a major credit event. Takes place over on the banks somewhere in the middle of the month of September. So we'll see how everything plays out during the course of this week, but I will leave you with this. QQQ, massive decline, minus 8.58% from the highs. You know, It's been going on for a month now. The highs went in back here in July 28th. Sorry, highs went in here on July 27th. Here we are on the 25th, having put in the lows on the 18th. Last week, Monday, Tuesday, Wednesday, Thursday, Friday, plus 1%, plus 1%, plus 1%, plus 1%. We had one of the greatest drawdown days, like I said, plus 1%, plus 1%, plus 1%. QQQs have zero DTE, something that we will be taking a lot of time to look at, a lot of time to take advantage of during the course of the week. Those of you that have margin accounts, obviously you're on the PDT rule if you're under 25 grand. Those of you that have cash accounts, you're limitless. You don't have any day trade rules. If you have a cash account, you can do 1,000 day trades in the course of a day if you've got the ability to do it. See you guys in the chat room. And if you have any questions, email me and message me privately over in the chat room, and I'll discuss all of it with you. Make sure you understand it all before we go into the week.